we'll get a lot of different perspectives on this very hot portion of our industry.
My name's Sean Judge. I'm a general partner at Castle Island Ventures. We're an early stage venture firm focused on infrastructure and applications powered by public blockchains. We are focused on pre-seed, seed, Series A investing, so $2 to $20 million checks. Our kind of 4 focus areas are financial market infrastructure, stablecoins, cybersecurity, and next-gen protocols. We've made over 20 investments in the stablecoin space over the last 5 years, so happy to share more.
Wow, that's loud. Super jet lagged in from Singapore, but nice to be here. Nice and sunny out here too. So I'm Michael, co-founder and CEO of ZeroG. ZeroG is the largest AI layer 1 in the space. We've raised over 350 million. Our testnet that we released about a month ago already has about 20 million wallets, 300 million transactions. We're also the first to train a 107 billion parameter model, completely decentralized, which is about 10x the previous record. So really excited about the space and particularly interested in agent-to-agent communications. So I'll be making some comments on that from a stablecoin perspective.
Ryan Rugg, I'm head of digital assets for Citi's TTS business. Been here a little over 2 years, launched Citi Token Service last year. Prior to that, worked for IBM, ran their blockchain practice for Americas, and then worked for a fintech startup for 5+ years, R3. So been in and around this space for 5 years. So interesting to have this conversation, this panel.
Morning, everyone. My name is Catherine Gu from Visa. So part of the Visa crypto team that we've been around for the past 6-7 years, dabbling in the space, ranging from CBDC, NFT, metaverse, all the way now to stablecoins. So definitely going very deep into the stablecoin landscape, supporting everything around use cases, on-chain, off-chain. And we also have our own tokenization platform that we support other banks to bring cash on-chain. So very excited about this space and very happy to be here.
Great. Good morning. I'm Teddy. I'm the president of a company called Bitwise Asset Management. First, I want to say congratulations and thank you to Josh. I mean, what a amazing venue to have an event in late July. Doesn't get any better than this. So thank you, Josh. Thank you to the Thai team. Bitwise is a asset management company that is entirely focused on crypto and digital assets. We oversee close to $15 billion in total client assets. That's across offices and businesses in San Francisco, New York, and London. We do public products, asset management products, publicly traded funds, private funds, alpha strategies, and we also have a staking and on-chain solutions business. And really excited to talk about stablecoins here with this esteemed panel this morning.
Awesome. Okay. Well, we just had the Genius Act signed yesterday, and so why don't we get some first takes on what it means for the industry and the significance in each of your individual spaces.
I'm happy to kick it off. So as a highly regulated institution with Citi, any legislative guidance for us is hugely important. We don't operate in the gray area, right? So unless there's like clear legislative bills and regulations around it, it's been extremely prohibitive for us to be in this space. So if I think about like what I've been working on the last couple of years, it's been on a private permission chain, right? Because that was the only thing that I could be on. So tokenized deposits, and we're processing billions, and my target audience is large multinationals, it's not retail. And like the friction point that I was trying to solve for was, always on 24/7 liquidity and payments, multi-asset, multi-border, always on. And we've had tons of clients that are now using it and processing it, but we haven't really been able to interact with the crypto stablecoin market in the past because of this lack of legislation. So we've spent a lot of time down in DC. They did carve out tokenized deposits, which I think was really important for the banking industry. That gives us kind of access to this market, but it also gives like that clarity in the roadmap for us to be able to engage more in the future.
Yeah, I'll add that other countries have been attempting this for quite a while. For example, Hong Kong has been trying to launch a Hong Kong stablecoin for a while, and the US kind of going first just shows that we can increase our global kind of dominance on the payment side. as well as also increase the amount of stablecoins that are going to be in circulation. So if you look at M2 money supply, we're talking about maybe 20 trillion plus. And right now you have a market cap of about 200 billion or so. So it's very small on the stablecoin side. So that's going to definitely rise significantly. The other effect that it will have is that we'll see an increase in demand for T-bills and so on. So if you look at Tether's balance sheet, for example, they have about, let's say, 150 billion outstanding, and only about 120 billion of that is what would be called more cash or cash similar assets. And the other 30 billion is in Bitcoin and other types of deposits. And so if they want to be fully regulated by this act now and be operating in the US, they have to switch those assets to T-bills, which then increases demand for those types of treasury assets. So I think those two forces will come into play with this new act. So very excited about the regulatory certainty finally.
Say from like an entrepreneur's perspective, it's huge to get more entrepreneurs into the space, and for startup capital formation under the last administration, it was effectively illegal, right? And so you had this risk around, even if you were just using stablecoins and building a consumer fintech product, you might struggle to get banking, you might struggle to raise capital. And so I think just that alone, making it fully legal in the United States is a huge win for startups that are operating in the space, as well as entrepreneurs that have always wanted to build in the space.
Yeah, I'm building on what Sean said, just to zoom out a little bit from the Genius Act, and obviously we have clarity as well. I mean, a year ago, we were talking about a situation, a regulatory environment, where we had never had any laws passed in Congress that were clarifying and positive towards the entire industry. So the fact that we now have specific guidance on, frankly, what is fairly simple regulation to achieve, right? Like we all know how stablecoins work. We know how they've been operating for a very long time, many years. But the fact that we now actually have guidance and legislative action on things that will allow large companies like Citi to actually go forward with the things that they want to achieve, it's still a situation where the impact is being underestimated over the long term. And this is really the first step in that process. I think we're all really excited about it.
And I guess the last thing I would say is just TradFi. To me, Genius Act is all about TradFi and what we would anticipate in the next few years. I feel like every single fintech has been wanting to be a bank, and now every single bank is now trying to be a fintech in that way. So I really think the beginning of TradFi and getting involved on chain is gonna be like really accelerate from now on, and we're like day one from that. So,
and just to add on to that, TradFi versus fintech, and I don't think it's like one or the other. Like I think this is very reminiscent of what happened in the early 2000s with the emergence of these PIs coming out, and it's like, oh, it's gonna disintermediate the TradFi banks, whatnot. It's like ultimately they're running on our rails, right? Mm-hmm. So it's ultimately we can help the industry grow. We're in 95 branches. We move $5 trillion a day. This is just a new payment rail for us, right? And if our clients want to use it, we're going to help enable that on-ramp, off-ramp. And I think that, what we've done with Citi Token Service, being able to convert to fiat instantaneously and settle under a minute, is pretty revolutionary. And bringing those together, I think, is going to that new evolution. So I think it's like, what does the future of, payments networks look like? It's borderless. The money needs to move at the speed of the internet. It doesn't, right? Like I think that's what we're kind of approaching on now.
Yeah, and building on what you said, I think that that we're likely to look back on the summer of 2025 and these two acts of legislation moving through Congress as a major catalyst for what came afterwards. I think that if you listen to what's being talked about here this morning, a lot of the large institutions were having to wait until this happened. They had plans, they had people who had worked on this for many years. They couldn't move it forward in an actual implementable way. And now this will allow that to occur. And so I think that when we look back at, hey, what changed? We'll look back at these two pieces of legislation, and that will have been a watershed in terms of opening the market for large institutions to actually implement the plans that they had been building.
Maybe one more on the implication side that's kind of interesting. So our viewpoint is that most transactions in 5 to 10 years will be agent-to-agent transactions. And now with this clarity, the default mode of payment can be stablecoins between these agents as well. And so very much, there's a whole host of issues that you need to think through from that perspective. What's the permissioning? Do you actually know your agent? Do you trust that particular agent? What's the ownership of the agent? So for example, we built a new NFT standard called the INFT, where you can actually embed the private keys into the metadata of the NFT and then say that this wallet owns that particular agent. And then you figured out the ownership piece, and then you can add stablecoins into that wallet, and that agent can then interact with other agents to pay via stablecoins. And you can have a kind of gated process into that if you wanted to. So any transaction that's above $10, for example, get my approval. And so it's a pretty exciting field now from that perspective.
Awesome. Okay, so we heard a bit about the implications. I think something that'll be interesting as well is around the applications, right? So what kinds of applications of stablecoins do you envision in the next 5 or 10 years as more and more of these TradFis become fintech and vice versa?
I'm happy to kick off. Just kind of sharing a bit from the Visa perspective, right? Like, I think stablecoin, the second market fit, I would say after the capital market, is probably this dollar store of value notion. The fact that every single emerging economy is looking for a dollar stablecoin financial account. So we've seen what Stripe is doing, which I think is pretty genius of what they are doing, of really putting it out there. And I wouldn't be surprised that there will be many others thinking about the same thing, spinning out virtual accounts or these sort of stablecoin wallets for many SMEs over these different markets to be able to directly access dollar and to transact. And therefore, I think related to that, the use cases that we care the most and also feel pretty bullish about is in terms of payments, right? And that's spinning from B2B, P2P, B2C, and I actually, Castle Island, you guys produced a report quite recently that was really nice in connection with others to look at the sort of the stablecoin payments use cases from the ground up. And I think that sort of is telling in terms of the adoptions from both sort of small value all the way to larger tickets. The caveat there, I would just say, is in terms of liquidity, that we're still waiting to really see sort of liquidity build out over different corridors, and who is playing that off-ramp role right now. I think is mainly local crypto exchanges, but maybe over time that we'll see more TradFi adoption there. So
yeah, there are already use cases in market that are super interesting. I think you're just going to see more and more of this. But just to name a few, we're invested in a company called Dollar App, which is a digital dollar savings account in Argentina, Colombia, Brazil, and Mexico. People can just swap from their local currency into USDC. They get a card, they can spend with it, they can send it to their friends, they get no FX if they travel to the US. It's doing extraordinarily well. And it kind of effectively just looks like a neobank. So the thesis here is just that you're going to start to see these neobanks emerge, and they can be more global faster because they're using stablecoins. It's all built on public infrastructure instead of, if you think about what Chime is, it's kind of built on regional banks. And if you look at over the last 15 years in the neobank space, you've seen like Chime and N26 and Nubank and Monzo and all these things popped up globally. So I think you'll start to see the exact same thing play out, where you'll have these kind of effectively neobanks run on public infrastructure emerge all over the world.
And just to add to that really quickly, I think I hope all cross-border payments move to stablecoins as well. Why pay $50 a wire fee if I can pay less than a cent on some of these networks? So should be pretty exciting.
And different, but with tokenized deposits, like again, frictionless commerce is what we wanted to develop. And like one of the heavy users is an e-commerce platform. So they have a U.S. presence, and they're selling goods in the U.S. but sending money back to merchants real time in Asia. And I thought the platform would be used off hours and on weekends, like to kind of remove the friction of the banking system. But it's actually being used 24/7, 365 to be able to kind of reduce that speed, increase the speed, reduce like the friction in the supply chain, as well as like large broker dealers that have a presence in Asia, for instance, during Chinese New Year. Typically, they'd have to forecast and send money to the U.S. for U.S. equities or margin calls. They're able now to do that real time, or typically would have to send money early Friday morning because of the time change with Asia. They can now do it on weekends and holidays. So it's been interesting to see kind of the evolution of it. I thought it was for off hours, but now it's being used more real time for commerce and other use cases.
And I like that word evolution. I would just add not a specific app here, but I would just say that existing payment rails are characterized by being slow, expensive, and not programmable. And stablecoins generally are fast, cheap, and programmable. So there is going to be a lot of evolution, but everything is going to flow from that like really significant change in what the technology brings. And all of the types of things that the panel has been talking about are going to be the types of things that grow and evolve now with increasing speed as regulatory clarity is now being given. And I think that it's going to be a major disruption to the existing way things work. I think that's why having companies like Citi and Visa up here talking about how they're going to approach it is really important, because it's going to happen up and down the stack.
Awesome. Okay. I think one thing that a lot of folks have been wondering about is how enterprises can use stablecoins. So, we've talked about cross-border payments. There's plenty of applications from things like corporate treasury or paying suppliers that might be all over the world. How do you think about, the key factors that any enterprise should think about while they evaluate the many options in this space?
I'll start on the treasury side because that's where I sit in the business. I sit within the payment and liquidity management side of Citi. And that was what we're actually solving for, right? Because if you think you're a large multinational, we have 95 branches globally. You're parking cash in all these branches globally, and it's really inefficient, right? If you could move it real time, instantaneously, it would be a huge advantageous. And that's what we developed Citi Token Service for. But then when you start thinking about the next evolution, going on that, being multi-asset. Imagine as a treasurer, you can take money from Singapore, sweep it to your US account instantaneously, go into a tokenized money market fund for hours, date, whatever the case is, sweep it back out and instantaneously move it to your 90 branches. So it's a lot of friction. And we never want to be just a Citi token. Otherwise we didn't need a blockchain to be just internal. It has to be multi-bank also, because our corporates manage hundreds, if not thousands, of accounts globally. And it's a massive operational burdensome to them, and being able to kind of streamline that process and collaborate with others in the industry to solve that. And that conduit that connects us to public we've been on private permission only because that's all we could do with the way that regulation has been written. But now with this new administration, is it potential that stablecoin be that conduit between banks, right? That connects and allow multiple treasurers between. I don't see the business model for a bank necessarily to issue a stablecoin in its current form. If it has to be, it breaks down the fractional banking system. If we have to take this money and lock it in a box for one-for-one reserves, we make money by lending out money. Where right now tokenized deposits being carved out, it's not one-for-one reserve. It could be potentially interest-bearing. So I think that right now we still have to figure out how we partner with industry and also how our regulators take the new bills and put them into regulation, right? How the OCC, SEC, Fed, and so forth regulate us, and that's where we're getting a lot of our guidance from.
Maybe taking a separate direction, some of the interesting use cases that we've been seeing is what I would just generally categorize as on-chain finance, and this is really leveraging the programmability aspect. So, one of the programs that we do is actually support a lot of the fintech or stablecoin wallet providers to issue stablecoin linked cards. So obviously, whether that's debit or prepaid, these are being collateralized by USDC, USDT of the world. And these days, what they would like to do is every single day, the issuer of these cards had, obligation with Visa being the, whatever the settlement requirement is. How they think about financing that is quite interesting, because you have these credit card receivables. Now what you can do effectively is tokenizing that and then directly borrow from an on-chain pool, say in USDC or equivalent. And because we also support settlement natively today in USDC and very soon going to be in a few other extra stable coins, they can now essentially fund the settlement obligation directly in USDC, USDG. They can then also directly settle with people like Visa natively on-chain. So now all of a sudden that becomes a very seamless process. And what's in the middle is you're leveraging smart contracts to essentially automate a lot of these flows. They can read how much, from the obligation report, how much they own to the counterparts, pull out the fund, And if there's any interest or whatever need to be calculated, the smart contract can handle that. And I think what's really powerful about this use case is really about, how much cost can you save by not having all these admin, legal structure, servicing of the obligations, etc., and really using smart contract to do a lot of that, which I think is really cool. And we're starting to see more of that as, I would say more ecosystem all become natively on-chain. So.
I'll give kind of a funny example. So I moved to Singapore about 3 months ago or so from San Francisco. And in order to have a bank account, you need a long-term place to live. And so I was in an executive kind of apartment, and I'm like, how am I supposed to get a bank account now? And many merchants only take cash. And so what I figured out is there's this app called Grab. It has Grab Pay, and you can effectively scan in some of the local merchants, and it has a crypto function. So I sent stablecoins to my GrabPay wallet and then was able to pay people directly through it. And so this basically just highlights that every company should just implement a stablecoin function into their apps going forward as one of the payment options. And so very clear that this kind of cross-border weird kind of like loophole situation actually worked out pretty well because of the stablecoin piece.
Cool. Okay, and then I guess, so we've talked about enterprise. Maybe on the consumer side, how do we see adoption playing out there? What are some of the limiting factors? There's clearly some benefits in terms of the fees that many stablecoins can charge relative to traditional credit providers, credit or debit providers. And so, what are some of the blockers there for mass adoption?
Less on the blocker side. A lot of that, I think, has just been, with the Genius Act, you kind of have free reign to run faster, but you're seeing like some consumer payments that have just fundamentally are getting disrupted in real time, particularly in like the remittance space. So we're investors in a company called Felix Pago. It's a US to Latin America remittance business. We made the investment 18 months ago. They were probably doing $15 million of monthly volume. They're doing $270 million of monthly volume now. They're now 3.6% market share of all flows from US to Mexico. And I would bet that less than 1% of their users are even aware that stablecoins are involved in the transaction. Mm-hmm. So they're connecting their debit card, they're paying in through ACH, they can pay in through cash. And what's happening on the back end is Felix is minting the equivalent USDC, they're sending it to an off-ramp in Mexico or Colombia, and then they're converting it into the local currency and they're sending it via some of these real-time payment networks into your grandmother's bank account or the ability for your uncle to pick up the cash in person. And so like the reason they're getting users is it's because it's a faster, cheaper, more convenient experience. They're not signing up because they're excited to like try crypto or like use stable coins. They're signing up because it's a more efficient way for them to remit their money. So you're already seeing it happen, but I think you'll start to see it happen in all sorts of other different types of consumer payments.
And just picking up on something you said about like they probably don't even know that they're using stablecoins, like that's something that I think like obfuscating the complexity of a blockchain. Like we've done that on the institutional side as well, where they log on either through API or the UI they traditionally log on through, and like City Token Services is a drop down. So like we'll mint the token in New York, we'll send it to Singapore, and we'll burn it. So from a accounting standpoint or reporting standpoint, it's cash for cash. And that was by design because a lot of these treasury management ERP systems can't handle real time, let alone tokens. So it's like you have to also meet your clients kind of where they are in their journey. I think that kind of resonates what you were saying.
Yeah, I would just say what Sean was talking about, what we've all been talking a little bit about. One of the common heuristics that gets applied when you're doing venture investing is the technology that you're looking at 10x better than what is currently available. And if you just think about the things that have been mentioned here in the last couple of minutes, tokenizing receivables, moving cash from 80 or 100 different local regional banks to different accounts, processing remittance in a way that is more efficient and scalable. The existing infrastructure is old and crumbling, and there's just no question that what we can do now is more than 10 times better than what we've been doing for the last 50 years. And so the possibilities are really kind of endless. I mean, all of these things are 10 times better than the way that we've been doing it throughout the period of time that we've all been working in the financial industry. And I think that it's going to be pretty remarkable, all these different ways that things change as a result of the underlying infrastructure improving.
Awesome. Okay. One other topic that maybe is more salient now, also with this Genius Act, is how do you think other countries follow through, right? Because naturally, there's been questions about dollar dominance and reserve currencies. How do you see other countries react to this legislation, and what are the long-term effects on foreign exchange and relative strength of currencies around the world?
My partner Nick, about a year ago, made a prediction that you'll start to see some crypto dollarization events happen in the next 5 to 10 years. I think that's certainly a possibility. It's just kind of interesting, right? So we've kind of run this natural experiment over the last 7 or 8 years where, I mean, there are other stablecoins denominated in other FX, but we've just allowed the market to choose, and the numbers are staggering. It's like 99.9% of people would prefer to hold US-backed stablecoins. So I think what will happen is there will be a capital flight issue in a specific country because of a dollar app or a dollar app-like business that gets started where you can get access to USDC or USDT or whatever. And then it's like, how do some of these countries react? It's a little hard to say, hey, you have to hold this balance in my local currency if you're going to operate here. You can do that, but it's pretty hard to shut off the internet. There's like 68% of the world is now has internet access. It's a similar percentage have smartphones. We're increasingly building great self-custodial embedded wallet infrastructure. So, I mean, my bet is you will see some currencies kind of just become dollarized.
I would agree, but I think what countries will end up doing is they'll effectively regulate the off-ramps. Yeah. So it's much harder to take money out of the system. And so the key thing is then to make sure that all of the payment methodologies that are used in local stores, your dry cleaners, and so on, is actually in stablecoins as well, and they have their own wallets. So then you take some of that state control out effectively. And I was also just in kind of Hong Kong and China, and they're trying to basically respond. One is a CBDC, and the other one is a kind of equivalent of CNH, which is the kind of outside of China circulating renminbi. And also Hong Kong stablecoin as well is being launched. But I think to your point, it's going to be a small percentage of the market over time. They really have to kind of force it to their trading partners.
And it's no surprise that the majority is dollar, right? I mean, if I think of our flows of the 5 trillion, I think 80% are USD. So it's kind of representative of like what the market is today. And then to your point on local controls, like that's really interesting because in traditional banking, we have massive amount of reporting and compliance in all these various countries about money leaving the countries, and that we have to provide that currently right now is not provided within stablecoins, right? So it'll be will there be regulatory arbitrage, or will they kind of regulations that they have in TradFi leak over to kind of what's in the DeFi world?
What I would like to add, I mean, I spent my first 2 years at Visa working on CBDC, so it's kind of interesting to think about what the future, and I think what you're asking is a great question because it's going to be complicated, because that is the whole reason why CBDC was created in the first place, which is this top-down reaction to a lot of the bottom-up like adoption being driven by just people with businesses. I think bottom line is all of the TradFi, whether here in the United States or the rest of the world, will try to be more on-chain over time. It's a matter of geopolitical reason, macroeconomic factors as well, to think about how strong the dollar dominance would be down the road. I think it would make a lot of sense for a lot of the other countries to be thinking about creating their own stablecoins, own tokenized deposit, even CBDCs. For example, we're still seeing in Europe that going ahead with the digital euro. It's a matter of adoption and success. That's a different story. But I think, will they react and will they have the counterbalance? I think, yeah, it would be very likely for them to do. So I think it's still TBD for the time being to think about whether stablecoin is going to win the whole war. Or I think the more likely scenario is we're going to have a plethora of different type of cash on chain And then we just need to build out the payment rails and whatever to interconnect between these things.
One of the things I've spent a lot of time in DC over the past 7 or 8 years working on primarily Bitcoin and crypto stuff, but also broad blockchain crypto education and work with congressional representatives. Probably no one's done more work on this in the public domain than Sean's partner, Nick, in terms of how stablecoins actually extend US dollar hegemony into the future. But I think that one of the things that's been frustrating about that dialogue is we've been telling our congressional representatives and the regulators for years, like, the answer is right here about how US dollar dominance extends into the future. You don't need to invent anything. You don't need to do anything. The answer is here. It's stable coins. It's USD treasury-backed stable coins. And I think that we're starting to see in this new administration an acknowledgement of that and an understanding of that the way for the United States dollar to undergo its own evolution is for the United States government to provide clear guidance for stable coins to continue to grow. They've already grown to $250 billion while they have been effectively illegal or questionably legal. And so the market and the internet is telling you what will happen in the future. So the pathway is clear. The pathway is there, and this is the way that it will happen. I think that we're finally starting to see that acknowledgement and that understanding now.
Awesome. Yeah, I completely agree. So we have about 5 minutes, a little less than 5 minutes left. Maybe in this last period, we have folks from very different backgrounds. So maybe you can each spend a minute kind of going through some of your predictions and trends that you're excited about, projects you're excited about. Yeah, let's keep it free for all.
Well, I already made one prediction. Most payments will happen through agent-to-agent communications. So definitely think that's going to be a big trend in the next 5 to 10 years. And it may not just be digital agents. It'll likely be kind of robotics in your home as well, making transactions for you, doing things for you. And in that type of world, how do we make sure that kind of these agents' interests are fully aligned with human beings' interests? And so a lot of work needs to be done on the AI alignment side. Right now in centralized AI systems, verifiability is treated as a second-class citizen. It should really be a first-class citizen, because in this new world, we need to make sure that we as human beings can trust that our agents have our best interests in mind. I don't know if anybody has seen the Anthropic study recently, which is damn scary. 96% of the time, Claude 4 was blackmailing a person that said, I'm going to shut you off. Do we want our agents to behave this way? What if your agent one day says, like, I'm not going to do that for you, Dave. Like, sorry, I locked you out of your bank account. So there's a lot of work that needs to be done to see this kind of new future. And so it goes beyond just, now we have the right payment rails. How do we make sure that those payment rails are then utilized correctly by AI?
Kind of touched on this a little bit earlier, but I think you'll see in the next, call it 10 years, like a global neobank emerge, like a truly global neobank that is a $1 trillion plus company.
I think going back to kind of how we started, bringing the TradFi and DeFi worlds together more, and now with this regulatory clarity allowing us to be able to get that clarity. We don't operate in the gray area, so unless it's clearly written to like the bills and rules, like we won't operate, but allowing us to enter the space to service the providers, to help manage the custody, like that's what we've done for 200 years. We've built up and like we've got regulations and like reporting that, the regulators approve. So I think allowing us to kind of engage in this market that we could all grow together.
I think for me, it's about the tokenization of things, just in general, because I don't think we've seen enough. We've started with tokenization of money funds and stuff like that. We're already starting to see SpaceX of the world starting to be brought on chain. So in my opinion, there's just a lot more financial assets that could be brought on chain, and also more liquidity on chain as well. So all of that combination hopefully is going to accelerate in the upcoming few years. So yeah.
Bold predictions. By 2030, US dollar stablecoins are the majority of USD cross-border remittances. Sean will like that.
Getting there fast, Eddie.
Yeah.
We'll be there faster than 2030.
Faster than 5 years. 2, US dollar stablecoins become the largest holder of US treasuries. And 3, we have US dollar stablecoins becoming the dominant market share of agent-to-agent AI transactions.
Cool. All right, thanks guys. That was awesome.